Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all on this Sunday morning. I hope all of you are fine and doing really well and taking care of yourself. And you do take care of your health if you're in North India because of the kind of weather situation that we are facing with the extreme cold uh, and hope people in the south are enjoying the weather there because currently it's extremely pleasant out there. So today's session will I'll focus more upon the two stocks I'm buying for the last 1 year or so as an SIP in my child's you can say a portfolio, you can say it's for child's education, etc., for the next 20 years. So we'll discuss that and then answer your queries as well. Hi there, morning Manju. Hi, Mr. Subramaniam. Rajesh, very good morning. Okay. I'll answer your queries as well, Sobha. So after the discussion, you can put up your queries. Gurpreet, a very good morning to you. Nathan, a very good morning and thanks for the support. And also, the link is in the description. You can support me on Patreon, on YouTube. You can email me if you want to be a member on WhatsApp. You can be that, although the benefits are the same in all three. If you cannot become a member on Patreon, you can have the membership on other routes as well. Uh, Morning, Sobha. So let more people join in the next 2 3 minutes, and then we'll have the discussion in earnest. As far as the Nifty is concerned, and I'll just point that out in the next 1 minute. Uh, I believe that the index is right now at a very crucial stage, probably from next month, around 8th, 9th, probably from second week of January will be able to understand as to where the market would be headed because do not take these less number of selling by FIIs as that the FIIs are changing stance and may just buy. We have to see how things go about in the middle of January, and then probably we'll understand whether the FIIs would come back or not, and that is needed for the markets to really go higher from here. Uh, so probably will be range bound in 1,000 1,200 point range in that sense. So uh, those who are trading and understand as to how to trade positionally will be able to make decent returns. They have to be nimble footed and make money over a period of some weeks and then take out money, book profits, and then probably get in again. So that would be the way ahead, at least for the next 6 months. I feel it would be very difficult for the market to get out of this range very quickly. But we will see new highs hopefully by the second half of next year, and things will look better. But there will be very decent, sharp, very you can say hurting correction that will hurt you, damaging corrections for your portfolio. So be extremely careful. If you're a long-term investor, no issues. I think in 6 to 8 months these things will go away because, as I mentioned, the earnings for Nifty would be 840 rupees, 830, 840 rupees for FY23, and closer to 950 rupees for FY24. So numbers will come in, so the stock market has to go up in the next 2 years. It is just that for the foreseeable future, for the next few months, we could be stuck in a range between 17,000 on the lower end, and we are at the lower end at the moment, and 18,300 400 on the upper end. So that's the call on the markets for the time being. uh, and as far as the sectors are concerned, I believe that consumer and FMCG type consumer stocks and IT may just perform for the next 3 4 months. Those IT companies that have not performed may just continue to perform. Uh, and then other sectors will kick in once this consolidation correction is over in the Nifty. It is not that the other sectors like real estate, etc., have become bad, but for the next few months, there could be some amount of consolidation again, sideways movement in those stocks in those sectors per se. So that's the call there. So let's begin the session in earnest. The two stocks I have been buying and continuously buying for the last 1 year or so, and I intend to buy going forward as well. But this time around, I have made a decision to buy uh, during the monsoon season, because these are related to real estate. These are real estate ancillaries and very, very good quality, high corporate government governance kind of stocks that I'm buying into for the next 20 years. So this is an investment I have done for my child, uh, who is around 3 year old now, who will be 3 year in February. And probably for the next 17, 18 years, I'll be needing that money for his post graduation. So that's what I'm doing at the moment. And the stocks I mentioned that uh, 2 or 3 times earlier, also vaguely in my live sessions. But to tell you officially, they are Asian Paints and Pidilite, which I intend to hold over the next 17, 18 years, and will hopefully keep on buying in every August or September during the monsoon season. There is always a dip in the paint stock and paint related stock, maybe 8%, 10%, 12% from the highs. And between July to September is probably the period I have figured out that that is a good period to accumulate the stock from a 20-year, 15-year, 18-year period, and would intend to do that. Has given decent returns over the last 1 year into my portfolio, and hopefully will continue to do that. I have mentioned on my other videos that I have made for you can say for stocks that could be held for 10, 15 years, etc. In that I mentioned that Asian Paints as a stock has given something like 22% over the last 30, 40 years, 22% CAGR. And rarely it has fallen on a year to year basis. Uh, One of the best stocks to have, and would continue to perform. It has been consolidating. I have no doubt that everything that comes its way gets mitigated over a long period of time. They are not trading bets, but they are very good wealth creators over uh, 15, 20 years. So uh, I have no qualms in even saying that if you're looking to do that, you can accumulate the stocks at even at these levels or around 3,000 rupees. So that's about Asian Paints. Again, Pidilite, I am doing that because I have analyzed a number of companies, around 8 or 10 companies, around 15, a dozen, just more than a dozen, to understand how their returns have been over the last 20 to 25 years. And these two companies come out trumps. Yes, Bajaj Finance is in there and FinServ, etc. But consistent returns, when you say that, those have become multi baggers. But these were expensive 20 years back and have kept on maintaining that growth rate. So I'm not looking at growth rate of the stock, but growth rate in terms of earnings, in terms of sales, in terms of profitability, in terms of dividend payout. And these two have done exceedingly well. So Pidilite is the other company that I'm buying continuously. Uh, I think if somebody is looking to put in safely into the stock market, very safely into the stock market, and buying into stocks, and also generate returns which are greater than FD, greater than even you can say many of the deposits, or you can say bonds, etc. I think this is the way to go. I think overall you can make around 18, 19% CAGR after tax over the next 15, 18 years, which is just magnificent if you are able to do that. I think this can give you 17, 18% after say uh 15 years time frame. I'm not saying 3 years, 5 years, anything can happen. So an Asian Paints at 3200 may go to 4000, and 2 years down the line you will see the stock at 3000 again. So overall in 2.5 years you would have made no money. But over 15 years, if somebody has to buy for his retirement, for his children's education, for marriage, etc., I think these two stocks are top class company, high pedigree. You probably do write in the comment box as to what you feel uh, about it, or there are any, you can say, apprehensions that you have but they have maintained their growth, and that's why the PE for these two companies have been high always. Always it has been beyond 50, 60 times, currently at 80 times. In difficult times, they trade at 50 to 60 times. So that's just about it. A correction of 20-25% is a major correction in these stocks. So that's the risk you're taking, and continuous, you can say, stock growth of around 18-20% CAGR is very much possible with the kind of infrastructure growth, real estate growth taking place, and the Indian economy that is set to grow over the next 15 years. There's no way that the Indian economy will not grow over the next 15 years. I think this is something. This is a stock that could be played out as a consumer stock, as an FMCG stock, as a real estate stock, infrastructure stock, you name it, economy stock. These two are multi-dimensional companies that could be played out in the stock market in any way possible. So if somebody wants to play the real estate cycle, I would say Asian Paints and Pidilite is the best way to go about, rather than getting into any real estate company that could be having a lot of debt, etc., and so many other things. Plus, if you want to buy consumer stocks, Asian Paints and Pidilite is up there. If you want to buy an FMCG stock with Asian Paints getting into, uh, you can say, sanitizers and other spaces as well, wood paint, etc., and many other dimensions. Another you can say way of looking at these two companies. So uh, that's why. So these are the two. I have not looked at, you can say, any other company at all. I am not a person who diversify a lot, and many of my members know about it. They have the whole portfolio, the trading portfolio and the investment one, and I like to have 4 or 5 companies, maximum 6 companies overall. So would like to continue investing into Asian Paints and Pidilite on a yearly basis rather than on a monthly basis, because I feel between August to October, August, September, I think in these 2 months, I get very good prices for these two stocks. All right, so I'm ready to answer your queries. Kindly use the super chat, super sticker feature that will help me grow the channel and help you also ask me questions and eke out answers in greater detail. So you can shoot your queries here and do write on the comment box as to what you feel about these two companies as a 15-year investment as well. All right. Uh, Have both 520. Do I need to add more? Well, Ranjit, if you have a 15-year time frame, any amount of Asian Paints and Pidilite, I feel is not enough. So if you can keep on buying, just keep on adding this over 15 years, they'll grow appreciably from the current levels. Soba Devyani International has already doubled, more than doubled when it reached its high just recently. Uh, Now consolidation is taking place, so it will continue to consolidate, I feel, for the next 20-30 days. And then probably you can take a call on that. See, Happiest Mind is a very good 5-year play. Tech Mahindra is a very good trade with a 7-8% stop loss from current levels. I think Tech Mahindra is headed towards 2000. Uh, Happiest Minds will get there. Comparatively, it's expensive, and that's why there's a long consolidation going on, and the breakout may take it to 2000 in a few months, but the breakout will take time in Happiest Mind. But both are top class companies. I won't be able to comment on Praj Industries, not tracking that segment altogether. All right. Acid, I would say avoid chemical stocks. I have mentioned that time and again that chemical stocks are like other, you can say, uh, uh, other stocks like steel, metals. You look at all those cyclical stocks. It is more cyclical in nature. So I won't suggest you getting into Sumitomo from a long-term perspective. Yes, technically, if you are able to understand the charts, etc., you can buy for a 15-20% up move. But again, in that you need to analyze charts, etc., and then take a call. But long term, I would avoid most of the chemical companies. See, Shubham, CDSL, very positive. A disclaimer: I'm invested in the stock. I have a trading position. I feel 2000 is possible on the stock. It is just that the market turned around, so the target was not met. Probably in 2-3 months' time, I see 2000 on CDSL coming in. Exide not very positive on the auto ancillary, these types of auto ancillaries. In auto ancillaries, if I can tell you, my favorites are uh, something like a Jamna Auto, Motherson Sumi, GNA Excel, Endurance Tech. These are very good companies in that space. I won't go and get into something like an Exide. So Whirlpool side, I, I don't know what is happening with the stock, but there is something going on because the way it is falling, and I'm very surprised to tell you frankly. I don't know what is the issue, but if there is no issue in terms of corporate governance, in terms of anything with respect to a howler of a number, then at current levels it looks extremely attractive. But you need to have a look at first the shareholding pattern in January and then the results in February to understand how the company is doing. If you are not invested, do not invest. If you are invested, do not buy more. Wait for those things to be clarified and then only take positions. That only if there is everything is fine, then of course buy more at these levels. Somani Home very attractively priced at 400, 420. I still maintain its fair value is around 900. Currently at 420, 400, 410, very good levels to accumulate. But it may test your patience even from here because the markets are not quite that healthy. So markets are fragile. So if you buy here, you have to wait a year and a half at least for that move for to see that move come in. Okay. All right. Oritra, thanks for your contribution. I want to invest in decent dividend paying stocks as portfolio stocks. I have OFSS, Sanofi Asian Paints. What else do you recommend? Gillette is one. Gillette is good, although it has not performed that well, but very good dividend paying stock. Pidilite is another one that you can probably add. And there are others if you check and look at consumer stocks. HUL is another one, Hindustan Unilever, Titan. Titan pays less dividend compared to HUL, but HUL is good in that sense. Dabur is good. Uh, but if you go slightly lower down the ladder, you'll find even mid caps in the consumer space that do extremely well, Oritra. All right. So Mastech, again, a stock in which I have a trading position. I believe 4,000 is coming in the stock in the next month and a half. Before results, I feel 4,000 is a possibility on Mastech, where someone with a short-term time horizon can book profits. On a longer-term time horizon, 6,000 is where we could be headed. Uh, See, TTK Prestige, I need to see numbers and then take a call. It has been, although it has performed, but it has not performed extraordinarily as other consumer centric stocks have done. So I've seen the stock from 2012 onwards. It has done decently well, but not quite something that has just been a rocket. So I would say wait for the numbers to come in and then take a call on this stock TTK Prestige. See, Sona Comstar looks good for long term, but again, valuations look stressed. So if you have a long term means 6 to 8 year time horizon, yes, you can accumulate here on declines. But there are other companies in pure consumption kind of companies that are into other spaces that could perform even better. All right. So Himadri's specialty is an avoid. I don't know what is the issue, but the numbers are not coming in. Although it had been pitched in 2015-16 as that EV play, as that new battery and electric vehicle battery play, etc. But it has not performed at all. Latent view on declines is a good buy from a long-term point of view. Trading, I won't suggest that you get in at this point of time. I think somebody asked about Kilpest, again a stock in which I have investments. Uh, a stock that could be 2000 in 3 years and it could be huge over the next 10 15 years. So do not buy Kilpest for a trade that okay, a third wave is coming, okay, something is happening, so let's buy Kilpest and we'll sell at highs. I think Kilpest is setting itself up for a consistent up move over the next 8 10 years. It is just building itself up for that, and we'll have announcements on the way, etc. There are many triggers that are going to come up in Kilpest over the next 1 year. Okay. See, Burger King is a decent company, but again, valuations are stretched. So I would say there are other new age IT businesses or new tech companies that are listed that you can look at rather than looking at something like a Burger King. Okay. Hi Saurabh. So thanks for your contribution. Nestle and Abbott for my child education monthly SIP next 4 years. Nestle is good. I would say from Abbott you can shift to something like a Pidilite and Asian Paints. See, you need to buy into consumer centric top class company. Nestle fits in the bill. Abbott is more into pharmaceutical, etc. Yes, it has done well. I won't say that it will not do well, but I think something like an Asian Paints or Pidilite would be a better bet. And 4 years, so if you like to take out money in the next 4 years, I won't think it will generate a lot of money for you. But if you can have an SIP for 4 years and hold 10 years, then Nestle will do a lot better, will do well, because Nestle has been consolidating for a year and a half. It has gone up, but not that much. So a big move in that is also possible over the next 6 7 years. Okay, so metals is an avoid for me. I think Tata Steel metals. I have a feeling that with the rate cycle turning around, I think all these cyclical stocks will feel the heat, and so things are turning around here. Okay. Hi Mukund, thanks for your contribution. Your view on Indico remedies and Oriental aromatics, small positions on each, 5% down on Indico and 13% down on aromatics one. See, exit Oriental aromatic. That's one call. Why? Because technically it looks not that great. Indico remedies is something you can hold. Let's see how these things pan out with the third wave, etc. If you get a rally, then take positions off there. But Oriental aromatics, see, one thing I can tell you is that if you are caught up in a trade, if it is a trading position and you're caught up there, have a 10% stop loss. That's it. Don't wait more than that, and just exit. If you have a long term position in Indico remedies, I think things will pan out well. But I think pharma may take time to perform. IT should do better. So look at IT companies that are consolidating, and you could make money there rather than staying here. Hopefully that answers your query. Okay. Hemisphere properties, again, I have not looked at in that sense, so I won't be able to comment. Data Patterns is a decent company, but again, valuations are so stretched that I can't say that okay, you hold and okay, it's going to give 20% CAGR. I think what you need to do is with the new age businesses that got listed this month. I'm not saying those Nika, etc. Those listed in September, August. Give them 4 5 months, let them come out with two results and then take a call. Plus in that 5 6 months, I feel that the market would correct even further than where we have seen, and there'll be up move and down move in the market, so you'll get very good opportunities to probably buy into the same companies at lesser value. So for example, Sigachi Industries, very positive on the stock. uh, 11 12 rupees EPS for FY22. I think they're going to come out with something like 15 16 rupees for FY23. 15 rupees EPS, 400 rupees stock. It's not expensive, not very cheap, but not expensive. But you look at it, how it got listed, how it went to 600 and now at 390 400. Very good levels to buy around 300. So that is what I'm saying, that you will get your fair value in these businesses as well in very distressed times in the markets. So kindly wait for those occasions to probably get into these type of stocks. See, MapMy India is a very good stock from a 10-year perspective, looking at it very closely. But I would wait for some sort of a decline. I think market cap around 7,060 is 7,000 to 6,500 is better to buy at. So again, 10-12% decline from current levels. Yes, if you have a 8-10 year view, you can buy at these levels as well. So there could be a chance that the stock moves up 30% and comes back again in the next 6-7 months. So it can go either way. So you can buy some here and buy on declines. That could be my call here. Finolex, I've not tracked recently, but as far as Astral is concerned, very attractively priced at current levels. 2019-50 looks very good support, and one can buy here even for a trade for the next 4 months. I think 25-2600 is possible on something like Astral. NGL Finecam is a decent company, but I am avoiding micro caps, a very small cap company, apart from say a Kilpest, in which I understand the business management, etc., very well, deeply. So looking at the numbers, etc., and the performance, NGL Fine Chemicals looks very good. But again, volatile moves, circuits, etc. So I would avoid. Uh, so I would like you to be in larger mid cap companies. That would be a better, you can say, thing to do. High energy batteries, very positive on the stock from a long term point of view, but again, this market may not reward you for the next 6 months. If you have a 3 to 4 year view, yes, you can go ahead and keep on accumulating the stock. If you have the stock, you can hold on to the stock. I don't know why SBI card is falling, but what I can say is that SBI card is at very attractive levels. I think it is the only company that is listed from the card space. It has the second largest market share. It is doing well. Maybe there are issues at the moment because of the markets, etc., and the economic situation, and so on and so forth. I think going forward, if you have a 3 4 year view, these are very, very good levels to get into SBI cards, even from a 18 months perspective. Okay. Thanks, Prasad, for your contribution. Your view on IEX short-term target. I have 1,800 shares with an average price of 268. I think it can reach 280, 285. See, if the markets are obliging, if the markets do well, I think this can go up to 290, 295 as well. But do not expect more from the stock. Rather than that, I think 300, 305 will be a strong resistance. So look for 290, 295 to exit in 1 or 2 months time. I think a move will come in the stock. Yes, you can buy Happiest Minds at current level, even for a trade with the stop loss at 1180. But I think it will move at its own pace, although it looks good at the moment. And from a long term point of view, looks very attractive at 18,000 crore market cap at the moment. See, camps, I don't know what is happening, the way it has fallen. We have to look at again the shareholding and the results. I think camps you buy only when it crosses 3,000 if you want to buy for a trade. And for investment, you need to wait for results and the shareholding pattern to understand. HDFC AMC, I would prefer HDFC Life rather than that, because once the flows dry out, and it will happen sometime, then it will be very difficult for these AMC stocks to perform. So, would not be saying that you get into it. I think Birlasoft have a stop loss at 500. You bought at decent levels and hold on to the stock. There is a possibility that 580, 585 possible. That's where you can book your profit. Avoid tired stocks because of the rubber prices. You look at where MRF is now, right now, and Apollo, etc. So do not get into tire stocks because of rubber prices. Again, another company that is more of a commodity kind of, sorry, another sector that is more of a commodity type of a sector. So that's why it would be an avoid. Okay, so KPIT, you have it at 75. That is magnificent. I think hold for the next 3 years. I won't say 5 years, but hold for the next 3 years. I see 60-70% upside even from current levels, and then probably take a call. Tata Power looks good rather than GSPL. I think Tata Power, yes, you can do SIP. I think whatever that is happening in the EV space, there are very few companies that could be directly played for it. Tata Motors, Tata Power, Tata Elxsi. These three are there up there. So probably yes, Tata Power you can do SIP, but I prefer doing SIPs in consumer centric stocks. They are more safer in nature. CDSL, I don't know, but at the moment, what I see is that CDSL is headed to 2021 before LIC IPO. So LIC IPO is coming out, so CDSL should perform at that point of time. Uh, After that, we need to look at how things pan out with the results, etc., because the stock is expensive. DMart is very attractive. A disclaimer: I have trading position here. So again, DMart around 4400, very strong support, and I see 56, 5700 on the stock over the next 2 3 months. I think the move should come in. Not performing at the moment, probably because of the restrictions in Maharashtra. That could be one reason, but technically looks strong, not weak, but at very good levels to be accumulated. All right, guys. Thank you. Thanks a lot for being online. We'll be online again on Thursday. Can you take care of yourself and do subscribe to my channel? Hit the bell icon so you can get my videos straight away when I post it. And can you do share the videos as well and support me on Patreon? Thank you.